Good day, fellow investors. Today I want to talk about what is likely my biggest mistake. And very often I mention this article from Seeking Alpha where I recommended Apple as a buy here in 2016, and the rest is history. However, this was also probably the biggest mistake that I made as an investor. And I want to go through this article. It isn't long, but it has the key components of why and how to find these great investments and then not make the same mistakes that I did. Just a note, this was written in 2016, so Apple then had a 4-to-1 split in the stock price, so everything that is there we will adjust for 4 times. And the key message here is the following. And when you get such an opportunity, grab it with everything that you have. And the key message there is high uncertainty, yes, but when you have high uncertainty with low risk, as we discussed in the recent chapter 9 of Margin of Safety, 15 ways how to find stocks to buy, probably one of the best ones is high uncertainty and low risk, because that is the essence of value investing. And let's now go through the article and discuss the key factors that I have to share when it comes to investing and how to nail them, how to nail such opportunities as Apple was in 2016. Now, when it comes to an analysis, I've made the analysis, and the first factor is that Apple had 38.8 in cash per share. Divided by 4, that's about 9. Compared to the stock price back then, that's more than 30% of the market cap was in cash. And I clearly explained that what do we get for the current price of 110 back then, that's 26 something now. So Apple is waiting for a tax holiday in order to repatriate the cash without paying the 35% US corporate income tax rate. Of course, and I also wrote that if Trump wins the elections, the tax holiday is practically a sure thing. Of course, when Trump won the election, that was a sure thing. So how is this a key factor here, and what makes it so simple? Well, the cash was there. The cash was Apple had more than 30% of its market capitalization in cash. The question was just when it will be repatriated for more and more buybacks that will push the stock higher. So the uncertainty was there. Okay, nobody knew when, who will win this or that. But the risk wasn't there because the cash was there. That is the key factor to understand. Apart from the tax holiday, also explained here how they keep the cash abroad in US treasuries, so very, very safe. And then the long-term scenario, the second factor was that Apple retention of customers and that they have reached 1 billion of active devices, that retention rate was at 90%. And then I made a model, assume you can use a phone for 2 years on average, how just the returning customers here would be enough to keep Apple profitable and stable over time, not estimating any kind of growth. Of course, this 1 billion active devices is now already 2 billion active devices. So retention rate of 90% of customers, very happy customers, high margins, high cash flows. And then the potential of building on that is the second factor, where the risk was that there was no growth or low growth ahead, while the reward was that higher growth potential ahead that actually happened, as this one went to the current 2 billion and more devices. Remarkable. Plus, if we read further, so everything great, very profitable, but if we look at the focus, already then the focus, I think it started 2013-14, was to push on buybacks as much as possible. And they really started lowering significantly the number of shares outstanding. And then I estimated that they just used the stable free cash flows ahead year after year, and only that would make Apple grow earnings per share by 4.7 or 5.3% per year, as I made a mistake there. That was already something huge. Focus on buybacks and earnings per share, all else equal, just no growth, no nothing, would increase back then Apple's earnings per share to $74 per share. Keep in mind the stock price was around 100, which is still crazy. And then on top of everything, Apple had a price earnings ratio of just 11 because the market was afraid that it will not grow in the next year. It was uncertain, while the market's P ratio was 22. But no company in the market had 30% of its market cap in cash and huge cash flows coming ahead, huge margins, and such a great retention rate for customers. Other companies, IBM, that was declining every year, had a P ratio of 11. So it was a really special situation. And as I said, buyback focus, rewarding, that will push the stock price up, plus the P ratio was just 11. And now my mistake. The fact is I did buy, but then again I sold very quickly when the stock went up a little bit. Don't know exactly, because I just started sharing my research, as you have seen on Seeking Alpha, and said, okay, I'm so smart, I made money here, let's do more research, let's do this, let's start a YouTube channel, research platform, whatever. The right thing to do was to do just like Buffett, put all your money into Apple and just enjoy it going higher and higher. So the conclusion here is that the opportunities like these don't come often, and the key focus is low risk but uncertain. The market will focus on the uncertain, when will something happen, and not on the margin of safety in 40% of market cap in cash, high margins, stable, predictable cash flows. And when that happens, you have to take the opportunity and just do nothing. So I hope this video gives you an indication of my biggest mistake, that in 2016 was, okay, this was an opportunity that you can hold and do nothing with it for likely ever. Typical Warren Buffett stock. I was in a different world, not as focused, and I hope this video is a reminder of when the next opportunity like that comes with extremely low risk, some uncertainty, but at a very low price. We are talking P ratio of 10, that I'm ready to grab it with everything that I have. And I hope also it gives you an indication of what to look for when it comes to investing. Unfortunately, it doesn't come that often as it was the case in 2016, but maybe if we have a recession in 2023 and things like that, maybe there will be more opportunities like this. Stay subscribed for that. Thanks for watching, and I'll see you in the next video.